Hi there, this is Ewan here from the2traders.com and welcome to our videos on trading psychology. This is definitely the less glamorous side of trading, but these concepts are absolutely crucial to understand for you to be profitable. So we're going to split this up into 5 key areas that we believe people struggle with the most, and those are coping with failure, loss aversion, dealing with emotions, and then handling drawdowns and consistency. So the first one I'm going to cover is failure, and that's really why we started up at the 2 Traders. So I had failed so many times before becoming profitable, and it was often so unnecessary. But when it's happening to me at the time, it was very scary and even quite embarrassing sometimes. Just to give you some background, when I first started in 2012, 2013, I knew absolutely nothing about trading. And as a result, I blew my account several times over. And from those experiences came the most valuable lessons I've learned about trading. And the important thing is you learn from mistakes, and it's going to help you enormously. So if you do fail, it doesn't make you a failure. It sounds cheesy, but you're not a failure unless you quit because you haven't learned from the lessons. So failure comes in several forms, and when it comes to trading, there's kind of two ways it comes through, and it's account failure and trade failure. So account failure can happen for several reasons. It can either be you've got a losing system, so you're never going to profit in the long run. You've got poor money management, which means even if you had a winning system, you could blow your account because your risk's too high, or poor discipline. So you can have the best system in the world, but if you're not going to stick to it, then there's no point in being there. So our technical analysis guys are help you to be there to help you be profitable. We have a whole 3-parter on money management, which I strongly suggest you watch. So these ones are going to cover that last section, and that's poor discipline. And this links in nicely with trade failure. So people view losing a trade and failure as a failure, which is a completely wrong approach to take. If you lose a trade as a result of a well-executed plan, then it's a success because you executed properly. If the market is moving against you, and your plan was to cut out a certain level, just because that trade finishes as a loss doesn't mean it's a failure. If anything, it's a success because you've executed your strategy successfully. And sometimes this isn't even your fault, so it can be very frustrating. For example, if the market gaps or your stop loss just gets touched and then the market is back in your direction, or you have an order and it gets filled at worst price, or some sort of news event goes away from you, and those can be very frustrating to deal with. But no matter what it is, your response will be the same. You should take a step back. Think about the bigger picture and don't let it cloud your judgment. A lost trade isn't the end of the world. It can be very frustrating, but failure, you need to learn how to cope with failure. You need to learn how to cope with losses. So we came up with these 4 rules to help you when you feel frustrated, and hopefully they'll be able to kind of help you in those times where you get a bit agitated and you want to kind of trade poorly. Just kind of think about these. So the first one is don't bet bigger. A lot of people end up doing this, and some people think the best approach to take to dig their way out of a hole is to risk more. And if they've lost money, they think they can make it back in one big trade. 99% of the time, this is a recipe for disaster. You're just going to end up putting a bigger position on, risking even more, and end up losing 3 to 4 times as much as you originally planned on losing because you got angry and frustrated with the market and then lost your discipline. So take a step away from the screen, wait another day and come back to the markets. The markets are still going to be there tomorrow. Don't let a loss cloud your judgment. And the second rule is don't give up. I mean, I've had some very low lows in trading, and I've felt like I wanted to quit hundreds of times. But in the end, I never let that feeling affect my actual trading, and as a result, I've always come out better. So often the most profitable periods come at the end of a losing streak, and that's usually because some sort of major shift in the market coincides with a stagnant period. So you're losing for a long period of time, and then you win, and you're not going to get those winning periods unless you kind of persist through those poor periods. So you might lose 10 trades in a row. But that is going to happen sometimes. You've just got to be able to handle those losses and keep trading. And then also always keep perspective. So some people view losing trades and weigh them a lot more heavily than a winning trade. So they might have a good win and they'll be a little bit happy with that. But if they had a similar sized loss, they'd be absolutely devastated. And that's just the way we perceive winning and losing. Trading is about consistency, not about individual trades. So having one losing trade or one bad day isn't the end of the world. I just use this example here. Back in May 2015, I had the worst month I've ever had. I lost 30% of my account in a month, which at the time felt absolutely horrendous. But looking back, I'd just come off a kind of tripling of my account in the 3 months before. I had 89% in December, then 22%, 35%. But that minus 30% month felt so much worse than any of those 3 positive months did. How they felt good. So it's sometimes good to step back a little bit, think about the bigger picture. Think, okay, it's one losing trade out of how many? It's one losing day out of how many? And the market's always going to be there. So don't rush back into getting into trading, and just because you've had one bad trade and you feel like you need to get back into it and win it back. And then the last one is don't be bitter. Resist the urge to try and take the money back from the market straight away, because you'll often just end up giving it more, and then it's a vicious cycle of when you stop. I mean, once you've lost, and you kind of fighting to get that money back, and the more you lose, the more you fight, until it's a very dangerous cycle to get into. So next time you're frustrated, just remember these rules. Hopefully they'll help you control your trading a little bit. And just remember, even the most successful people in the world lose. It's not embarrassing to fail. It's not embarrassing if you blow your account, or when you first start, or you lose a lot of trades. It's all part of the learning process, and just make sure you understand why, and you learn from that. So that's the end of this video. Hopefully you'll be able to identify if this is happening to you, and you'll be able to catch it before it's too late. Thanks a lot.